Early gains. Nicole Petalini is coming to us from the NASDAQ. Let's head over to an exchange in Chicago. At the CBOE is Alan Nuckman, Chief Market Strategist at Agora Financial. Alan, Coke has been having a little bit of a rough start to 2019. Tell me what you're looking at.
Right. Well, we can see the macro market march continues. So it's about finding value, and value can be found, I think, in some of these distressed Dow stocks. Coke's a great example. Coke's down 3% year to date. The Dow itself is still up 10%, even with this little pullback with the Boeing pressure. Now, this is a stock that's traded between 44 and 47 after that gap down with that earnings news. So a breakout of this sideways range we've been in for a month targets 50, and then we're right back to the highs once again.
Okay. So it's relative underperformance to basically everything. Its own benchmark, right. The Dow, the S&P 500, some of the companies within its own space. Alan, I know you're mostly a technical guy. I mean, the story that we've discussed here for Coke and Pepsi, of course, is they've been needing to find other avenues for growth, even as staples, but Pepsi's doing a little bit better. I mean, Pepsi's up on the year. I mean, are you looking at a possible type of pair situation, or is this just pure Coca-Cola getting exposure?
I think it's just a pure Coke play. It's a very conservative play. If you look at the action in Coke for many years, it's been sideways to slow drift higher. Yes, we made multi-year highs here, not so long ago. But I think it's really about a value play. It's about finding good risk to reward. And at these levels, it's very hard. Now, we've been talking many weeks. I've been talking, more aggressive plays. Microsoft just made new highs. So Intel, what's a breakout. So I think this is a more pragmatic strategy after a 20% bounce off the market. If you look at the Dow, if you have a full V recovery in this Dow from 29,000 down to 22,000, that targets 32,000. So that's 25% above where we are right now. So let's talk about the math about this play, because it's as much about the trade as it is the underlying stock.
Okay, and I'm going to give us some more perspective here as you go through your trade, Alan, because this is looking at, you're bullish on Coke in the short term, right? This goes out to June. And again, just to look at the peer, Pepsi is up on the year, and actually the spread between the two is really at the peak level it's been over the past 2 years, so some might say it needs to come in a little bit. So there's some more perspective. All right, go ahead. Give us the rundown on what you're doing.
So we're looking for a little bit more catch-up in this play, so to speak, but it's not only a June option, it's June of 2020. It's in the money call. It's a $40 call. So this is an option that's now, almost $6 in the money. It costs $7. So I was looking at it. Why buy a June option that only has 3 months? A June of 2020 has 1 year and 3 months, and it only costs $100 more. So why not buy extra time, even though you may not need it, but you got more time to be right. It's going to behave very well. Like I said, it's deep in the money, so it's got a delta of about 80%. It's going to act like the underlying stock. And if this market, I don't think it's an if, I think it's more of a when this market gets back up to those highs, we're in a strong bull market until proven otherwise, then this option, which costs about $700 right now, it would be worth $11. So that would be a 50% gain without a whole lot of mental risk, I don't think. I'm not going to lose sleep over a Coca-Cola position over the next year and 3 months.
All right. Alan, good stuff. I like it. Interesting look at a company here and putting it back on our radar for us. Appreciate it. Alan Nuckman coming to us from the CBOE.
Thank you.
All right. You got it. Mr. Nuckman is the Chief Market Strategist at Agora Financial. Up next, let's talk ETFs, exchange-traded products, and more. We'll be right back with Morningstar's Pro on the subject.